We start off with the markets, and Asian equities could be under pressure this Friday, with the financial and export sector set to feel the brunt of the selling after Wall Street tumbled to 12-year lows on fears that General Motors may be going bankrupt. The Dow Jones Industrial Average falling a hefty 281 points, the Nasdaq giving back 54. Also not helping the situation are the poor earnings numbers of key regional corporates whose profits and margins have fallen significantly over the past quarters. For more now, we're joined in our studios by Professor Charles Schell of the Manchester Business School. He's based in Manchester, but joins us now in our Singapore studios. Professor, thank you so much for joining us. Please tell us, it's all doom and gloom, all grim news across the board that we hear day in and day out. Is there a silver lining from this downturn? Is there a light at the end of the tunnel that we can already start seeing?
That's a really good question, and I think we really do need some good news. That's the only thing that's going to break us out of this vicious cycle we've been through, this persistent stream of bits of bad news that have pretty much scared people out of the market, and we're not.
Confidence has been totally lost.
We're not going to see a huge change until shoppers start shopping, until the manufacturers build up their inventories, until banks start lending.
The great question is, when will that start once again?
Well, this is the interesting point. Nobody is going to tell you we've hit the bottom of the cycle. That's something that we know better from past recessions. You can't actually spot that. But the positive thing, I guess, is that when we do get past this bottom, when we actually get to the absolute low point, that there's going to be a reorganization, that we're going to be doing certain things better than we've done them in the past.
So how will Asian economies look like after this whole economic downturn?
One of the key things has to be less dependence on markets like the United States and Europe. Asia itself has the potential to be the greatest market in the world, but Asian companies have always looked east and west for their markets and not looked close to home, where the consumers have been creating a substantial amount of buying power.
So Asia has really been impacted by this campaign for globalization. So are we likely to see more protectionism here rather than globalization going forward?
Well, protectionism's never been popular in the region, and some of the big markets have been talking about presentation. I think that talk's mostly been for domestic consumption. Mm-hmm. American politicians are never going to be popular if they say we need to have more integrated markets, we have to reduce tariff barriers, and especially if that means jobs are going to be moving out of the United States. But when they talk outside of the United States, they're a little bit more temperate in what they say. They talk about free trade, and the Americans have long been the world's free traders, even though they persistently talk about protecting American jobs.
But the likes of Singapore, Professor, Malaysia, the Philippines, Hong Kong have been totally dependent on their export sectors. When you say an expansion of domestic spending, are we starting to see that happening in our backyard?
Well, there's only so much that Singapore, with the size of its population, can do to spend its way out of a recession. Singapore is dependent on other markets, like the Chinese market and the Indian market, which will continue to grow, and those middle classes will create the purchasing power that's going to be able to maintain the Singapore business model. It's not the American economy, which has got a relatively developed middle class, which is spending and very effective at spending. They manage to maintain persistent deficits in their spending.
Because everyone talks about globalization, but it seems like no one can really find one coherent policy to be able to resolve the problems that beset us now.
Well, you don't find stability in a market, you find persistent movement. Things are going to change, and it's that change that we expect. But we've seen over the last 30 years that the shift in the balance of economic power has been moving east towards markets like the Chinese market. So we expect that change, and we need the change. There's no way that the American market is going to maintain its preeminence as the world's largest consumer market with only 250 million people.
Keeping our fingers crossed that these changes will be for the best for all of us. Professor Charles Schell of the Manchester Business School, thank you, sir, for your insights.
Pleasure.